Hello, hello. Hey, Friederike.
Hey,
Thank you
how
so
are
much.
you?
Yeah, very good. How are you?
Also good.
Thank you so much for joining. And welcome everybody that is seeing us online. This is one of the first ever European Ethereum Institute live sessions. We've rebranded into a new name and have previously done everything under the EUCI. So it's an honor to have you, Friederike, joining us for this first ever. We're going to be talking about a very, very interesting thing, building European sovereignty with you and Gnosis. We have a set of questions, but first, let us quickly just introduce who we are, who we have, and what this is all about. So, quickly about the European Ethereum Institute, we are an advocacy organization based in Brussels. A lot of people already know us. We defend the European Ethereum ecosystem, and we are speaking to the regulators on one side and to experts from the industry, obviously, on the other side. We also give these types of live studio sessions and we throw a lot of workshops. So to kind of keep these conversations going. And on the other side, we have today with us Dr. Friederike Ernst, which is a co-founder of Gnosis, one of the longest standing builders in the Ethereum ecosystem. So it's really an honor. A former research physicist, you helped start Gnosis around a decade ago already, alongside Stefan George and Martin Koppelman, growing it from an early experiment in decentralized prediction markets into a foundational stack that today spans from safe call swaps, Gnosis chains, and the infrastructure for instant card issuance, Gnosis Pay, and a lot of other things. So you are also Secretary General of the German Blockchain Association, more known as Bundesblock, and German's leading blockchain policy body. Most recently, you also co-launched the Ethereum Economic Zone, which is a really, really interesting topic we hope to address today as well, alongside Zix Jordi Bailina at ECC, a framework designed to make Ethereum fragmented layer 2 landscape function as a single composable economic system. Gnosis joins tonight's conversations as EEI's newest supporter as well. So it's really a great timing for everything altogether. So with the first part, we're just going to basically set the scene, and there's going to be a couple of general questions, but the floor is also open to whomever is watching us online. So if you have any comments, if you have any questions, there's a space where you can put your question, and hopefully there's going to be enough time to raise that as well. So first, thank you again for joining us. And to start, we're going to start with everything that normally people ask. What brought you here? Could you tell us a little about your own path from the research physicist, which is incredible, to co-founding Gnosis? What's the link here?
Yeah, absolutely. I'd love to. I've always loved building things and finding out how things work. So kind of becoming a research physicist was a fairly natural path for me. I'd always really enjoyed cryptography. So kind of I was given a cryptography book when I was 12 or 13 by my dad. And after that, I was the little kid running the PGP Linux server. I wasn't very popular, but it's kind of I've always loved the idea of kind of encrypting data, and so kind of when Bitcoin came around, obviously it piqued my interest. I was kind of committed to the academic path. At that time I was about to start a postdoc at Columbia, and then I moved on to Stanford later. And kind of I dropped out of academia when Ethereum came around, because I saw how much it could change the world. So we started building on Ethereum. Martin and Stefan, both friends. They are computer scientists, so I think kind of Gnosis, to some extent, kind of organizations are always pervaded by who the founders are, and kind of this is very much kind of a organization founded by 3 German engineers, and kind of I think the DNA kind of carries through. And so we started as a prediction market platform. We built the framework that Polymarket later built on top of. We were really early. So we launched our first smart contracts in August of 2015, just 2 weeks or so after Ethereum Homestead launched. Maybe we're the earliest project still around and kicking. Yeah, so kind of it was super early, and so we started building infrastructure for the things that we needed. We needed to be able to hold tokens securely. We needed to be able to trade long tail, especially long tail tokens for prediction markets. And this is how we went about it. Kind of we built projects for ourselves that the ecosystem started using too. They became pretty successful, and so kind of we moved into this foundry, kind of perpetually spinning up new and interesting engineering projects.
That's amazing. It's really great to hear that, there's 3 engineers, all geeks, coming all together. It sounds like the origins of the EEI, but we had 3 lawyers coming together and we really started something as well. So yeah, our audience more or less is the lawyers and the regulators and policymakers and whomever actually, is a professional in this segment. So for those, would it be possible for you to explain what Gnosis is? Just for everybody to really understand the concept, a bit less so focused on the technology side, although we do have a lot of people with heavy understanding of technology as well. But like conceptually speaking, what is Gnosis?
Okay, so maybe I'll zoom out one level, because kind of I think I can endlessly geek out about technology, but I think that's not what matters here, right? So kind of Gnosis at its core is an organization that holds a couple of values very, very strongly. They are for agency and self-empowerment and optionality. So kind of we believe that users should be enabled to do things for themselves. We object to extractive economies. We think too often the game is stacked against the user, and the user really is kind of the little guy being exploited. And I think that's at the heart of the Ethereum story, and too often we forget that, right? Kind of Ethereum wasn't meant to make you rich, it was meant to set you free. And kind of like we are still here for that. We're still here to kind of build for the little guys, to help them to help empower them against the Goliaths of the world. And out of that, kind of, we build products. So we built Gnosis Safe, which is the most popular smart contract wallet on Ethereum. At times, it held in excess of $100 billion worth of tokens. We built CowSwap, which is the biggest DEX aggregator on Ethereum. It trades $10 million a month. And we built Gnosis Chain and Gnosis Pay, which kind of gives you an IBAN integration into your self-custodial wallet. And you can also spend out of that self-custodial wallet directly everywhere Visa is accepted. So kind of we've always built solutions that allow individuals to hold up the rights that they have, and that they shouldn't have to concede to anyone for access.
That's amazing. I mean, it really spans from having the Gnosis Safe to what you just mentioned, the non-custodial wallets, right? My next question would be, what do you see is the trend looking like? Like, which of the products, mainly yours, but also others, are nowadays mostly relevant in this space? Maybe agentic payments are also something that people speak about a lot. I know there's been an event lately in Bundestag about that. And how does your work specifically then relate to all these trends?
Yeah, 100%. So if you look at agentic payments, it's a big focus for us. So kind of this is also the one that I spoke about at the Bundestag. So if you look at AI agents, they're starting to transact on your behalf, right? So kind of booking, purchasing, negotiating. But agents, they can't get bank accounts, and they probably shouldn't hold your card details. But they can operate smart contract accounts with policies that you set, right? Kind of spending limits, allow lists, co-signing above thresholds, and so on. So kind of this self-custody plus a policy engine is exactly the right model for delegating money to software. Gnosis Chain is very much gearing itself towards that. The other thing that I see as an important trend right now is stablecoins. So kind of stablecoins are really starting to from casino chips to a legitimate payment rail, right? So kind of if you look at remittance flows and how much they have increased, B2B volumes kind of in stablecoins settling kind of doubled over the last year. And kind of the next chapter to me is definitely non-USD stablecoins, which kind of currently 99% of on-chain stablecoin volume is US dollar denominated, and that's got to change. It has to change. We also see that with TradFi entering the arena, right? Kind of like if you look at Revolut, for instance, kind of they are now the biggest crypto trading venue in Europe. And Robinhood even has its own chain and so on. So kind of, to me, kind of, it's almost like the technology debate, these rails can make it or not, that part's over. So that's already conceded. So kind of like what we now have to look out for is that we can also carry over the values that kind of brought us here in the first place, right? Because we didn't come here to build something that is operationally smoother than what was there before. I mean, nothing against operational smoothness. I'm all for efficiency gains, but kind of I came here for the paradigm shift that Ethereum promised. And if we just enable incumbents to move on chain and use the same using the same extractive business models, where kind of you pay for acquiring the customer, and then kind of you milk that customer until can't milk them anymore. Then I think kind of we've, on the face of it, we've won, but kind of at where it matters, kind of in the spirit of it, we've definitely lost.
Yeah, I hear you on that. This is also something that we quite often bring, at least when it comes to what are the benefits of DeFi, and not only DeFi, the whole ecosystem, right? A lot of times we hear questions that are very basic to some extent, like what is Ethereum? What benefit does it bring? What is the full potential of the DLT overall technology? And then from those benefits, of course, we then proceed towards what are the risks that we need to be mindful of, and how do we then mitigate those? And nowadays, quite often, what is being discussed in several different jurisdictions is that perimeter around what is actually perceived to be decentralized and what not. But then it's no longer really about having this distinction between these two worlds. It's actually more about how do we integrate. And I love how you now phrased it. You want the values to be posed in this new world as well, to be transferred into that world. This is basically what we stand for, right? If we actually came into this space because we like the values, because we like the crops, even though they weren't defined at that time just yet, I think, yeah, we are here to win the fight overall. And this is probably how we want it to look like. Talking of this, there is specific dangers that are being brought by centralization. And this is no longer just something that we see in TradeFi or, the already existing institutions and existing systems. This is perhaps something that also exists in DeFi. So I kind of want to touch on that topic. What are the dangers that come with centralization? Like we even saw the FATF report today. There is often this concentration of governance, how tokens are being distributed, how the power is being distributed, how people have votes concentrated somewhere. And then, of course, there's questions around how people are holding the admin keys. Um, ESMA or European Commission even went that far to ask if it matters to have a marketing person identified or whether the code is open source. So there's a bunch of all these questions that go towards how do we define concentration or where do we define that limit. So I really want to touch that base. What are the dangers of centralization in your opinion?
That's a good question. Maybe let me kind of quietly kind of reframe it, if that's okay.
Mm-hmm.
So kind of like if you ask yourself, why does centralization bother you, right? Kind of like, because kind of, and I've said this a million times before, but kind of like decentralization in itself is not a value, right? Kind of like it's not a value in and of itself. So kind of we have to ask ourselves, why are we arguing for decentralization, right? And to me, the answer is centralization comes with choke points, and those choke points are where you're vulnerable. Kind of that's kind of whatever kind of the setting, whether it's kind of off-chain payments infrastructure, whether it's on-chain, it's all the same. And kind of in the traditional payments world, for the longest time, we didn't think about this too much. But if you look at, for instance, credit and debit cards, we all use them multiple times a day. And every one of these transactions in Europe actually runs through US rails. So kind of, and the same goes for every time you pay with your phone, right? Because both Apple and Google are American companies. So let me flip it around. Kind of, if you have something that is centralized, but you know the person in charge is unfailingly benevolent, it's a total non-issue, right? But we don't have that guarantee. And the problem is that we cannot be sure that the person in charge is unfailingly benevolent. And kind of, if you look at kind of recent developments and kind of in geopolitics, it's very clear that kind of this is not a given, right? So if you look at how supposedly neutral rails are already used to kind of administer unilateral sanctions. So let me cite kind of like one example here that kind of I think to everyone in Europe should be super galling, right? So kind of the International Criminal Court judges who issued an arrest warrant against Netanyahu, they were personally sanctioned by the US, and they were completely debanked. So kind of all their bank accounts were frozen. They had all their cards cancelled. They even had Google accounts closed and health insurance gone, and even kind of like their ebooks were gone, because kind of like they were completely deplatformed. Kind of some of them gave interviews of how it was to live like that, and kind of like we're kind of it's funny because it's so absurd. So kind of like they said, okay, you don't think about this, but kind of like you can't even book a hotel on booking.com because this only works with a credit card. You have to call the hotel like in the 90s, and you have to say, I'm planning to come to your hotel in August, on the 8th of August, and stay for 2 nights. Do you have availability for me? I'll send you a bank transfer, and then you can kind of bank with kind of like your local savings union, and they will usually kind of, there is some sort of bank that you can still find that you can still have a bank account with, but they won't be able to give you any card. And it's ridiculous the way that kind of we have sleepwalked into this situation where people can be sanctioned for things that no one should be sanctioned for. So kind of like, I'm not arguing against sanctions per se, right? Kind of like, I'm not here to kind of defend terrorism and drug lords and whatever. Kind of like, that's totally fine, but kind of like, for one nation to be able to unilaterally say, we do not agree with this judgment, and hence we're kind of sanctioning you personally, that is beyond reproachable. That's super scary. Kind of like, when you're in that situation, that's your vulnerability right there, right? Kind of, if it can happen to sitting judges, whom can't it happen to, right? And so having neutral rails, to me, this isn't ideology. This is knowing that kind of there's no flip of the switch that anyone can pull on you. Okay, so kind of, it's not being there at anyone's mercy. It's being there because you, as a human being, have to be able to have a seat at the table. And kind of like, this is what kind of the core promise of Ethereum is to me. Kind of this credible neutrality and censorship resistance and the openness and the kind of all of that. I mean, at the same time, kind of, it does have very obvious drawbacks, right? Kind of like, if you have something that is completely censorship resistant, it will execute code regardless of whether the code is completely obviously malicious or not, right? So kind of, this is why we see all the hacks. And I mean, kind of now with AI, kind of like, it's just like, kind of, it's on steroids. Kind of like every other week, it's been relentless, right? Kind of like, this year has been terrible. It's been absolutely terrible for us. It's been so brutal. And that is the flip side of that censorship resistance, right? Kind of like, you can't be debanked, but neither can the bad guys. So what we have put forward in Cannes this year, which I think is extremely interesting, also to kind of like all your loyally folks who are hopefully listening to this, is the Ethereum economic zone. And basically, the Ethereum economic zone is the idea that Ethereum is kind of becomes almost like the economic operating system of the world. And then on top of that, you can have specific zones, and the zones they can be substantially different from Ethereum. So kind of, they do not have to have the censorship resistance property. They can require, for instance, KYC. They can require AML. They can require whatever you want them to require. But while you're on them, you can still interact with everything that's on Ethereum within a single transaction. So kind of like, it's like you're it's like you're in a protected area of Ethereum. Everything in principle, from an engineering standpoint, everything kind of you can do on Ethereum, you can do on this chain if the chain operator allows it. It can be completely neutral. Operator doesn't actually need to have an operator at all. The operator can be Ethereum, but you can also be an opinionated operator that says, okay, I only want the people on my part of Ethereum in my zone to interact with these and these and these and these things on Ethereum, kind of as a whitelist. You can also say, I have a blacklist. So kind of by default, everything is open, but they cannot use this and this and this and this, and kind of this is updatable. So you can restrict what kinds of calls you allow in and out. And in that way, you can actually make a zone that is functionally compatible with Ethereum in real time. So kind of, it can actually have, you can have blocks, and this is slightly technical, but kind of like, you can have blocks on either side where you have a transaction that actually does something to both blocks. So kind of, we call this synchronous composability, kind of like with atomic transactions. It means that it simply means that you can have a transaction that spans both networks, and either the transaction happens on both sides or it happens on neither. Okay, so kind of let me give you an example. So kind of, let me say I'm sending you funds from my address on one network to your address on a different network. Okay, typically kind of like how that would have worked before the Ethereum economic zone is kind of like I would have bridged the funds. So I would have gone to a bridge. I would have gone to a bridge interface. I would have sent my tokens there. Kind of they would have been locked for a bit, then kind of until finality is achieved, and then a message would have been created that would have been passed to your network. Then I would have had to wait for finality on your network. And then you would have had to go to the bridge on your end of the network and say, hey, I'm Anja, Friederike send me tokens here. Please give me them. And that contract that now owes you tokens on your network, that contract then gives you the tokens, right? And now what I can do is kind of like I can directly send you tokens from my address to your address, from my network to your network. And because my account balance is only lowered if yours is increased, kind of like both of these parts can only happen together. Kind of this happens in the same transaction, but it happens in one block. And kind of it doesn't just work for sending tokens. It also goes for kind of like asking things multiple times back and forth. So you can actually run a computer program that spans different networks, and they can talk to each other kind of like many times back and forth, and then kind of finally it's settled across both networks in one block. And that is, it's magic. It's magic facilitated by zero knowledge proofs. And kind of it technically it wasn't possible until very recently, because kind of creating the zero knowledge proof, that's the proof that makes the other chain understand what your chain state is and be able to build on that. Creating that used to take a lot of time. And now kind of we've gotten that down to a few seconds. And kind of if you look at blockchains, your now is pretty extended, right? Kind of like on Ethereum, kind of like your now moment is 12 seconds, right? This is how long kind of the state lasts. So if you can actually prove your state within that window, you can transact across the two networks as if they were the same network. And that to me really increases the utility of Ethereum, because kind of we have kind of like the censorship resistant property that we talked about and that we love for very obvious reasons, because no one can cut you off. But then kind of in terms of user experience, that's often terrible user experience. If you look at kind of like how much funds have been lost in hacks and scams and even just fat fingering, right? Kind of like how much money has been lost. That's terrible. So kind of like having some sort of recourse and having some sort of security net, some sort of safety net, kind of like within specific zones that are then not censorship resistant, but can synchronously compose with the rest of Ethereum and all of the other zones that may have different flavors of this setup. You can have private zones. So kind of like this does not hinge on the zone being EVM. So you can have any state transition function. So kind of it works out of the box with systems like Aztec, for instance, where you may want to have your private information, but you don't want to have audio compute because they are really slow in computing things. So you want to be able to mix and match, and kind of this approach gives you that mix and match. And kind of like if something terrible happens and kind of like a zone kind of senses you for whatever reason, you can always eventually exit to Ethereum and kind of be in the sharky waters again. But I think it marries kind of these both ends of the spectrum really nicely to each other.
So we started from something that to me sounded as if we're hedging the current geopolitical situations with what the Ethereum economic zones present. But then this also sounds as if this is now the very much necessary bridge towards the institutional adoption. As in
100%.
we need this. Okay. Yeah.
I mean, if you speak with a central bank, kind of like there's no way you would get them to kind of deploy anything on Ethereum because it's not their infrastructure, right? But you also, at the same time, you don't want kind of like, I think most central banks see the upside of blockchain on an infrastructure side just because it's resilient and efficient. But if you tell them, okay, kind of like this is Ethereum, it's crops, kind of like anything goes, better make sure kind of like everything works as intended. This is a no-go. This is not going to fly. But if you tell them you build your own zone or you have someone else build a zone for you, and you deploy your things in that, you can be the validators, kind of like you can have the branches of your Federal Reserve kind of be the validators of this. You write the rules. You can issue your citizens their IDs on this. You can do KYC for them. I mean, we wouldn't even need all the sum subs, right? Because in principle, we have states who could take on this function, right? Kind of like I'd much rather kind of have the German state kind of be able to verify me against kind of whichever protocol I want to use, rather than using Onfido or SumSub or whatever else people use. You could issue your CBDC on that chain. It's your chain, right? But kind of you can connect it to everything that's already out there. So until now, kind of you kind of had to you had to choose between being on your own, but then also having your own infrastructure, and kind of like it was safe, but there was no one there, or being in the open sharky waters. And now kind of like you can have both, and you can have both in a maximally flexible way, because you can set all your own commissions. And to me, that's super nice. And I mean, if you look at, it's a game changer. If you look at international payment flows, so I believe it was in 2022 or so, when the European Union decided to freeze Russia's assets abroad. I think it was 650 billion or something. It was crazy. And kind of there's only a limited number of places where you can actually, as a sovereign nation, where you can actually leave your currency reserves. I believe it's London and Brussels and somewhere else. And kind of like these 650 billion were in Brussels, and they just decided to freeze them. And they decided to kind of take all of Russia's banks off of the SWIFT network, except for one, Sberbank, because we still needed that to pay for Russian oil and gas. Because kind of we have industry here, kind of like you can't leave them completely stranded. But that just shows you kind of like if I were someone kind of in charge, kind of the finance minister of any nation, even kind of like the one still in good standing, I would take note. It's like, okay, maybe don't do this. And that kind of compromising the neutrality of the rails, I think that's a huge mistake. And if you look at Ethereum, you can't do that because of crops. So kind of even if you kind of like now have kind of Russia kind of they already had their own SWIFT system that they kind of reactivated after this, and obviously it's not as pervasive as SWIFT, but kind of it works. And kind of like the Chinese also built their own system exactly because kind of like the SWIFT system is very much not neutral. So the Chinese have their own system that's kind of now like 20% of volume of SWIFT. But kind of like if you imagine these being zones on Ethereum, they can still interact through Ethereum, right? Kind of like they can, if you say, okay, look, I want to have power over my own domain, but I still want to be able to kind of ultimately transact with domains that are outside of my power, then this is kind of the setup that you want. You want kind of like the super neutral base layer, that's Ethereum, and then everything else goes on top.
This now has potential to shift the global powers, for sure. Yeah. So I have a bit of a picky question. So the Ethereum Foundation is a Swiss-based nonprofit. And my question would be, because we do have lawyers, and we do intend to look into what is the legal architecture as well. So how is EEZ connected to a Swiss-based nonprofit? What's the relation between the Ethereum Foundation and the EEZ? Is it connected in any way? Is it still a credible, neutral, open source, global government network? How is it actually governed?
Yeah, absolutely. So the Ethereum Economic Zone Association is a Swiss not-for-profit association, and its statutes mandate that it builds open source software. Basically, it's a very thin layer, it's a very thin coordination layer on Ethereum that tells different rollups how to interact A with Ethereum and B with each other. Okay, so there's no governance there. Kind of like it's literally just a vehicle because we need to pay devs, right? You can also,
Understood.
it's also very much not a kind of, we rely on grants. So kind of my company Gnosis actually gave the biggest grant to the EEZ Association, but the Ethereum Foundation is also co-funding it, and there's Octant and a couple of others. But yes, it's very much reliant on grants for building this out for all of Ethereum. And then kind of this is core infrastructure. It's neutral. It's just a smart contract. There's no governance. So yeah, it's a commons.
Okay, yeah, understood. And the association normally is actually the perfect basis for these types of public goods. So it makes perfect sense. All right, and then Gnosis, having all these different types of things out there, there is also Gnosis Pay, right? So as much as, EEZ may actually function as an infrastructure being provided to all these geopolitical players, I do want to understand a bit more about what Gnosis Pay actually does, like settled through a regulated euro token and issued by a licensed e-money institution to a Visa card and an IBAN. Like there's all of it all in that Gnosis Pay. Walk us through why building around a regulated euro rail actually mattered enough to design for it. I mean, part of this question was also answered already. We do want to have sovereignty. We do want to enable the little people, the little men, and we want to have this freedom on our own. But was there something else that also mattered here?
Yeah, absolutely. So we started building Gnosis Pay a few years ago, and at the time we had already been building for almost a decade, right? So kind of we had been building for 8 or 9 years already in this space. And we looked at who used our products, and it wasn't the little guy. Very much wasn't the little guy, right? Kind of like if you look at the average user of Safe or CowSwap, they're whales. They're kind of like the same 10,000 people all over again. Kind of the average trade size on CowSwap is 50K. Okay, it's kind of it's people it's where the people who want to get the best trade settled go, right? Kind of like it's not for the $50 traders. It's the serious traders, and kind of we asked ourselves, why haven't we actually succeeded in building something for people who are, for lack of a better word, normies, right? Why haven't we done this? And part of the answer is that going between the normal world, the kind of the regular off-chain world, and on-chain, use a kind of like, it's still sometimes a little difficult, but it used to be super difficult. Okay, so kind of what you used to have to do is you opened an account with a centralized exchange, kind of like, and yeah, kind of send money there, kind of like via SEPA transfer. And then you converted it into ETH or USDC or whatever token, and you kind of off-ramped it again into the on. Always had to go like this one middleman, right? Kind of like you had to trust that middleman. If kind of Kraken or Coinbase or Binance, whatever you used, went down or kind of embezzled your money, kind of it was gone. So kind of like there was yeah, kind of from a security standpoint, kind of that did not look like a great idea. And if you look at if you look at these new rails that we built, the rails are really good, but all of the value is outside of them, right? So kind of you have to ask yourself, how do we get the value from outside of this system into the system? Because kind of like, I think it's somehow it's a nerd mistake. So kind of you say, okay, I'll build this parallel system, and when it's done, I just tell everyone it's done, and they can all come over. This is very much not how it works, right? Even if you have a technically superior system, you can't say, okay, now drop kind of like everything you've always done the way that you've done it, kind of, and come over because this is technically superior. That's kind of the worst marketing play in history. So kind of what you want to do is kind of like you want to build bridges between what people already have and what the new system you've built. And then you kind of carve out experiences that are legitimately better than what people already had. And kind of, I'm thinking kind of European banking for users is actually pretty pain-free. So kind of we have free bank accounts, we have free credit cards, we have free instant transfers and so on.
Exactly.
So kind of keeping that is difficult. But if you look at the edges, you find examples of where you can make it worthwhile. So kind of you can, for instance, cross-border settlement, still super expensive, especially if it involves FX. You can do that much more efficiently on-chain. You can do transfers at non-banking hours instantly, and kind of these sorts of plays. You can also hold non-local currency very easily. And kind of like in Europe, maybe not the biggest draw, but in LATAM, we see that to be a huge role. People using currently mostly US dollar denominated stables in LATAM. That's just kind of like, because it's the easiest way to kind of flee their currency. So building around these experiences requires making it as easy as possible for people to actually move in and out of your system, and kind of allowing IBANs to connect to your smart wallet and allowing spending kind of those funds directly where people actually spend. That's a key part of the equation. Kind of, I like to liken it to the telecom revolution. So I think we're probably a similar age. So you probably also still remember when Skype came out, and kind of Skype's very first value proposition was Skype out. So kind of what you did is kind of like you installed a program on your computer, and it allowed you to call any landline number in the world for the local tariff, right? And kind of like how it worked under the hood was kind of the first 99% of the route were voice over IP, and then kind of like from the local internet node to your friend's landline phone, that was kind of the good old copper cable. So kind of that's why you had to pay the local rate. But what they didn't do was say, okay, download this program and have your friend also download the program, and then you can call each other for free. Because I mean, obviously this is what happened down the line. But kind of, you didn't actually have to convince anyone else that you had a superior product. Kind of like the value proposition for the user was you pay much less. You don't need to convince anyone of anything. And then kind of obviously kind of like all your friends ended up having Skype too, and kind of you Skyped each other. And now even if you still have a landline phone and you call someone else who miraculously also still has a landline phone, kind of like from both landline phones to each other, it's voice over IP the entire length of the distance. There's no copper cable involved anymore, and kind of like all of this actually happened while people were continuously on the phone, right? Kind of like there was never a moment where you say, okay, now everyone switch, and kind of building these bridges between what we already have and where the value sits and where the user behavior sits, and the new, arguably much better rails. That's the job to be done here.
Yeah, very much. It reminds me of a conversation we had with a central bank when people were asking, why people are still not using, or when people are going to use this. And I was like, in my mind, it was simply the image of my mom using or buying Bitcoin, and to me, the only way she's going to do it is that Bitcoin is available in her bank already. And if there's going to be a stablecoin, it needs to be also provided by the bank. It needs to be something that she's already familiar with. And like you said, it doesn't really matter if it's a technical advantage, if we now have smoother operations. What matters is also a human element in the whole thing. So if you ask my grandpa, he's only there because he likes the bank assistant. So he's going to go to the bank no matter what it's going to look like. It's like a human element to it. So it's the opposite of me, but this is how it currently looks like. Right. So we are having just two more questions. Like the final one is just going to be for wrapping it up. But before we go there, you already mentioned there's LATAM that is predominantly working with the dollar-denominated stablecoins. We also kind of suffer in Europe not having the euro-denominated stablecoin. So I kind of want to get your opinion on this. Where do you think we are right now? Do you think that we're going to get to the point? Does it really matter for the sovereignty of Europe to have the euro stablecoin? What the future of Europe is going to look like, in your opinion?
Oh, 100%. I mean, even if you look at just the last year, kind of if you held US dollar stable coins and your life happens in Europe, you lost 20% of your worth, right? And I think that alone hurts people so much. And if you actually look at the ease with which euro stablecoins integrate into blockchain, it's astounding. So kind of if you use players like Monerium, you can literally use it as backend infrastructure to enable your customers, your users, to have an IBAN integration in their wallet. It's crazy. You don't have to do this yourself. Kind of like we already have this infrastructure, and becoming a bit more opinionated about this, because I think often we default to assuming the user wants US dollars. I don't think this is always true. I think a lot of users don't want US dollars. And yeah, basically it's already there, and I think it'll pick up steam really soon, just because kind of the alternative economically really hurts.
So maybe we just need to listen a bit closer to the demand that already exists.
Yeah.
All right, to close the whole thing up, tell us what you are genuinely optimistic about.
Absolutely. I'm kind of like, this is possibly the most brutal phase in crypto for me so far. But I am the eternal optimist. So kind of I think kind of it matters more than ever. So if you look at the centralizing forces of A, geopolitics, and B, AI, which we haven't really talked about much, you need the decentralization that Ethereum can offer as a counterweight. And I think the way of marrying that decentralization with a user experience that is tolerable and interesting to incumbents is the Ethereum economic zone. So kind of I am most looking forward to the launch of the mainnet contracts. I look forward to seeing the first couple of zones live, and I look forward to the unlock that will bring.
Amazing. That's really good to hear. I look forward to it as well. I'll definitely be following up the progress. We do have one question from the public, I see now. If that's okay. How do you see the future of online identity? EU will introduce the EUID wallet and in the next year, but could there be an alternative on Ethereum? This is a very, very interesting question. I think we've actually touched upon it in several of our submissions, but yeah, happy to hear your thoughts.
Yeah, totally. So the way that I see identity in the future is probably not one size fits all. So kind of I think there'll probably be different attestations as to your identity, and you'll use whatever is good for you in that moment. I would very much welcome it if the EUID wallet were to be interoperable and kind of like with kind of the permission setting that the Ethereum economic zone architecture allows you. I don't see real downsides to it either.
Yeah, would be nice to have something of a EU ID to use whenever we do the KYC instead of the existing solutions. Like you said,
Yeah.
I trust German government a bit more than the private solution, perhaps. But yeah, great question. Thank you so much, Max, for bringing it up. With that, I think we're going to conclude. Thank you so much. This was a very, very fun experience for me, and hopefully everybody else online enjoyed as well. Uh, we'll hear from you soon, hopefully, whenever the EEZ launches online with the mainnet. And until then, have a nice time.
Perfect. Thank you for having me.
Absolutely.